We're back on Morning Movers. Analog Devices set to report earnings ahead of the open tomorrow. Analysts are expecting adjusted EPS of $2.30 on revenue of more than $3 billion for the analog chip maker. Shares of Analog Devices are up more than 60% year over year and hit a new all-time high last Thursday. Time now for Options Corner. Joining us to take a deeper look at the chart is Rick Ducat, lead market technician. All right, Rick, let's get into this. What trends do you notice on this chart?
Yes, good morning. So pretty strong move for Analog Devices here, far outperforming the tech sector and the S&P, but not quite up to speed with the broader tech sector, or semiconductor sector, the SMH ETF. Granted, that's pretty hard to compete with when you have the likes of companies in the storage space, such as Micron and Seagate and Western Digital making these kinds of moves here. So Analog Devices, though, is part of this group here. So analog meaning semiconductor chips that take in physical signals from the world, like temperature or speed or whatever, rather than digital, meaning ones and zeros in binary code for computers here. So you can see this is one of the weaker sectors, relatively speaking here, but starting to gain some strength recently here. So when we look at this chart specifically, it's a pretty interesting setup if you are bullish, rising wedge type shape here, but we had an upside breakout here. 343.96 is our new high point here, a old high and subsequent low at 328 provides us with a potential support boundary. Meanwhile, we had a gap and a subsequent low here near about 307. So that could be another area to watch if we do start to move lower after earnings. So when we look at our moving averages that we follow here, we can see that our blue 5-day EMA was a supportive area in our last session. That comes in near about 331 as of our last close here. Could be an area to watch out for, because that would mean if we broke below it, we'd be re-entering that rising wedge type shape there. Beyond that, we have our teal 21-day monthly EMA near about 316 or so. RSI showing kind of a triangular shape here. Interestingly, we had repeated crossovers into the overbought area despite seeing some slight bearish divergence here. So a mismatch between price and momentum, not exactly what you want to see if you're bullish here, but it can also mean just setting the stage of consolidation before another leg up. So it's a very nuanced type of indicator to consider here, often commonly slows down into earnings as well. Finally, our volume profile study shows that we have a significant amount of trading activity without really a clearly defined node. Once you start getting to around 320 or so, that's where things start to pick up. Then we have another large pocket of trading activity here coinciding with our range-bound area from about 272 to 283 roughly.
All right. Thank you, Rick. That is Rick Ducat, lead market technician. Now let's bring in Tom Whitecoast of Fast Market and senior options contributor. Tom, what's the approach that you would take for an example trade here, especially with earnings in front of us?
Well, you start looking at the charts that Rick kind of showed you. The bar's really high on this one going into the report. We've seen names that have had a high bar going into the earnings. They beat on revenue. They beat on EPS. The stock still falls. So I took that kind of approach here when looking at a risk-defined type of strategy here. If you think maybe it's not going to go much higher, it is just below those all-time highs, up about over 60% over the last year. So you have to take that into consideration when going into this report. So I looked at something a little bit neutral to bearish on this one. That gives myself a little bit of cushion to the upside in case I'm wrong and the stock goes higher. So I looked at a short call vertical. I went out to the February 20th monthly options that expire in just 3 days, so really short-term positioning on this ADI trade. We're going to sell the out-of-the-money 350 strike call, and then against it to make it risk-defined, we're going to buy the 360 strike call. So a short $10 wide neutral to bearish call vertical. You're going to collect roughly, if the stock opens up here around 337, you're going to collect roughly about a 240 credit. That's what you can make on this, $240 per spread with about $760 in risk on each spread, but that's all the way above 360 to the upside on this one. If you collect that 240 credit, takes your break even all the way up to 350, 240 to the upside. You're giving yourself about a 4.5% 4.5% cushion to the upside before you start getting hurt on this. The option market pricing in about a plus or minus 5% move either way, about $17. So this is right about at that one standard deviation move that the option market's pricing in. You got a probability of that short 350 strike being out of the money at expiration, which is what you want. You want a high probability of about 71% if the stock opens up here about 337. So a little bit more passive. You profit in 3 out of 4 scenarios on this type of strategy. You just don't want that explosive move to new record highs after the report.
All right, good stuff. Thank you, Tom. I'll see you later today on Fast Market at the lunch hour.